Three stocks to avoid. November 2024. Number 1, Palantir. Palantir has been one of the best stocks this year with shares up 257%, and there are good reasons for that performance. The company's AI product is helping large enterprises cut costs, retain customers and increase profits. In the latest quarter, Palantir revenues grew 30% to $726 million. That was supported by a 54% increase in US commercial revenue and a 40% increase in US government revenue. The company's bootcamp strategy continues to win customers, translating into impressive levels of free cash flow. But despite Palantir's success, it wouldn't take that much for things to start slowing down. Aggressive economic policies like tariffs could drive up inflation, and that could see large companies begin to cut back across the board. That wouldn't be a huge problem for the business of Palantir, but it would be a huge problem for the stock, because with a market cap of $150 billion, the market is already pricing in huge amounts of growth. The numbers imply a valuation of 55 times annual revenue and 150 times free cash flow. That valuation simply leaves no margin of safety for investors. Number 2, MicroStrategy. MicroStrategy stock is up 500% this year and about 60% since Donald Trump won the US election. Trump pledged to make America the crypto capital of the world, and that has helped Bitcoin to hit new all-time highs. That's a big deal for MicroStrategy because the company has been accumulating Bitcoin since 2020 and now holds over 330,000 coins. With one Bitcoin worth $91,000, that values MicroStrategy's stash at over $30 billion. But despite having $30 billion of Bitcoin, MicroStrategy stock has a valuation of over $80 billion. So investors are paying a huge premium for the stock, and it's not completely clear why. One reason might be that investors trust management's ability to trade Bitcoin effectively. The company uses leverage, and investors see MicroStrategy as a higher risk-reward play on Bitcoin. But MicroStrategy management also has a habit of selling stock and diluting shareholders, especially when the stock gets too high. Bitcoin is volatile and runs in cycles, and with investors disregarding all types of risk right now, the end of this particular cycle might not be far off. MicroStrategy can't keep going up forever. 3. Oklo Inc. Oklo designs and deploys nuclear power reactors, and the stock has nearly tripled over the past 3 months. Artificial intelligence and the energy transition are boosting demand for clean energy, and that has caused excitement for Oklo's nuclear systems. In the latest quarter, management announced it had signed letters of intent to supply power for 2 major data centers, taking its total signed agreements to 2.1 gigawatts. The company is also backed by notable investors such as OpenAI founder Sam Altman and new Department of Energy pick Chris White. However, those investors likely got shares at much lower prices, and Oklo has not yet made a dime in revenue. To get its business going, the company still needs to invest huge amounts of capital and go through lengthy license applications. As a result, Oklo doesn't expect to get its first reactor operational until late 2027. In other words, it's going to be a long time before Oklo brings in any significant revenue, and profits will take even longer to arrive. This is one stock that is simply too difficult to value. So those are 3 stocks to avoid in November 2024, but these are my personal opinions, not financial advice, and I hold no position in any of these stocks. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.